Somewhere in a government database right now, there is money with your name on it. Not a refund you are waiting for. Not a check that is on its way. Money that has already been processed, already been transferred, already been sitting in an official government account, in some cases for years, waiting for you to come and claim it. And the overwhelming likelihood is that nobody has called you to let you know it is there. According to the National Association of Unclaimed Property Administrators, the official federal organization that tracks this, there is currently an estimated $70 billion in unclaimed property sitting across all 50 states right now. $70 billion. Held legally by state governments. Belonging to real people. With real names attached to every single dollar of it. And according to that same organization, approximately 1 in 7 Americans, roughly 33 million people, have unclaimed cash or property waiting to be returned to them right now. That is not a small number. That is not a fringe situation affecting a handful of people who made unusual financial decisions. That is 1 out of every 7 Americans walking around with money in a government account that they have never checked, never claimed, and in most cases never even knew existed. If you are over 60 years old, and especially if you have moved homes, changed banks, worked multiple jobs, or had a spouse or parent who passed away, the probability that your name appears somewhere in one of these databases is significantly higher than you might think. This video is going to show you exactly what this money is, exactly where it comes from, exactly where it is sitting right now, and exactly how to find out whether any of it belongs to you. Because the process is free, it takes minutes, and the government is legally required to give it back the moment you ask. The first thing most people do not understand is how money ends up in these databases in the first place. It does not happen because of fraud. It does not happen because a bank or insurance company or employer decided to keep money that was not theirs. It happens because of a legal process called escheatment, and it is one of the most quietly significant financial mechanisms in the United States that most Americans have never heard of. Here is how it works. When a financial account goes without any activity for a set period of time, typically between 3 and 5 years depending on the state, the institution holding that account is legally required by state law to report it as abandoned and transfer the funds to the state government. This applies to bank accounts, savings accounts, CDs, brokerage accounts, uncashed checks, insurance policy proceeds, pension distributions, security deposits, stock dividends, and safe deposit box contents. The state then becomes the legal custodian of those funds. It holds them, indefinitely in most states, and is required to make them available for the rightful owner or their heirs to claim at any time. The critical detail that catches most people off guard is this: receiving automatic interest deposits into an account does not count as activity under most state laws. An account that has been earning and depositing interest for years can still be classified as dormant and eventually escheat, transferred to the state, if the owner has not made a deposit, withdrawal, or direct contact with the institution during the dormancy period. FINRA, the Federal Financial Regulatory Authority, has stated this directly in its investor guidance. An account might be considered dormant even if dividends or interest are being deposited automatically, because the legal standard for activity is typically owner-initiated contact, not automated transactions. This is the scenario that catches older Americans most frequently. A savings account opened decades ago. A CD that automatically renewed. A stock account that has been quietly receiving dividends. An insurance policy from a previous employer. All of it sitting, technically earning, but legally dormant, and in many cases already transferred to the state without the owner ever receiving meaningful notice. Now here is the part that should produce genuine urgency for anyone watching this. AARP has stated directly in its own financial guidance that older Americans are more apt to have unclaimed assets than any other age group, precisely because they have had more years to accumulate them and more opportunities to lose track of them over time. Think about the financial footprint of a life lived across 60 or 70 years. Bank accounts opened at institutions that merged, changed names, or closed. Savings bonds purchased decades ago and tucked away and forgotten. A pension from a job held in the 1980s at a company that no longer exists under the same name. Life insurance policies taken out by parents or spouses who have since passed away, with proceeds that were never claimed because nobody knew the policy existed. Security deposits from apartments rented 30 years ago. Stocks or mutual funds purchased through an employer's retirement program that were never rolled over when you changed jobs. Every single one of these is a category of unclaimed property that the Pension Benefit Guaranty Corporation, State government databases, federal agencies, and institutional registries are currently holding, waiting for the rightful owner to step forward. The Pension Benefit Guaranty Corporation maintains records specifically for pension plans that have been terminated or taken over from private employers. Former employees whose pension plan was absorbed or terminated, situations that were extremely common during the corporate restructurings of the 1980s and 1990s, can search the PBGC's database directly for unclaimed pension benefits. These are not small amounts. For someone who worked a union job or a long-term corporate position for 20 years, an unclaimed pension benefit can represent tens of thousands of dollars. The Department of Labor operates a separate database called Workers' Owed Wages, which tracks unpaid earnings from employers who were found to be in violation of federal wage laws. If you work for an employer who was ever subject to a Department of Labor enforcement action, even if that happened years after you left the job, you may be owed money that has been sitting in a federal account waiting for you to file a claim. And the U.S. Treasury until recently operated a tool called Treasury Hunt for locating unclaimed matured savings bonds. As of late 2025, that tool was retired under provisions of the Secure Act 2.0, but unclaimed matured Treasury securities, including savings bonds, can now be located through state unclaimed property databases via NAUPA and through treasurydirect.gov. The U.S. Treasury has made clear that NAUPA through unclaimed.org remains the correct starting point for anyone searching for unredeemed Treasury instruments. The state-level numbers alone are staggering when you look at them individually. New York State's Office of the Comptroller returned $163 million in unclaimed funds in 2026 alone, and their website states that every single day, the state comptroller returns $2 million to entitled owners. $2 million. Every day. To people who simply went to a website and searched their name. The types of property New York holds reads like a complete financial history of American life. Bank accounts including savings, checking, and CDs. Court funds. Dividends. Estate proceeds. Insurance benefits and policies. Stocks, bonds, and mutual funds. Telephone and utility deposits. All of it sitting in official custody, legally belonging to the people whose names are attached to it. California's Unclaimed Property Program is one of the largest in the country, regularly holding several $billion at any given time. Texas, Florida, Illinois, Pennsylvania, every state in the country maintains its own program, its own database, and its own claims process. And the easiest way to search all of them at once, in a single search, for free, in about 3 minutes, is a website called missingmoney.com. This is not a third-party commercial service. It is the official national database managed directly by NAUPA, the National Association of Unclaimed Property Administrators, and it is the only database officially endorsed by that organization. It searches 49 states simultaneously. It is completely free. It requires nothing more than your name and the state or states where you have lived. But here is where this becomes more serious than most people initially realize. The money does not wait forever in every situation. While most states hold unclaimed property indefinitely with the right to claim preserved permanently, some states have provisions that affect the value of what is held over time. Interest does not always accrue at market rates once property is escheat. In some cases, assets like stocks are liquidated into cash when transferred to the state, meaning you would receive the value at the time of escheatment, not the current market value if the stock has appreciated since then. For older Americans who have dormant brokerage accounts or stock holdings that were escheat years ago, the difference between the escheat cash value and what the stock would be worth today if it had remained invested can be substantial. This is one of the reasons that searching for and claiming unclaimed property sooner rather than later is consistently recommended by financial professionals. There is also an important distinction that many people miss when they search and find nothing. Searching your current legal name in your current state of residence is only a starting point. Unclaimed property is often listed under previous names, maiden names, hyphenated names, names with slight spelling variations from different records. It is listed under previous addresses in states where you lived years or decades ago. It may be listed under the name of a deceased spouse, parent, or other family member whose estate you may be entitled to as a legal heir. NAUPA recommends searching every state where you have ever lived or worked, every previous name you have used, and the names of deceased immediate family members. What feels like a clean search result under your current name in your current state may miss significant holdings listed under a maiden name in a state you left 30 years ago. The Pension Benefit Guaranty Corporation search specifically requires information about former employers, the company name, the approximate years of employment, and the state where the work was performed. If you work for a company that went bankrupt, was acquired, or significantly restructured, and you had a defined benefit pension plan, checking the PBGC database is something that financial advisors consistently describe as one of the most overlooked steps in retirement planning. The question most people ask when they find out this system exists is a straightforward one. If the government has my money and knows my name, why haven't they contacted me? The answer is both legally accurate and genuinely frustrating. Financial institutions are required to make a reasonable attempt to contact account holders before escheating funds. In most cases, that means a letter sent to the last known address on file. If you moved without updating your address with that institution, something that happens with older accounts constantly, especially among people who have moved multiple times over the decades, that letter went to an address you no longer live at, and the legal notification requirement was considered satisfied. Once the property is transferred to the state, most states are required to publish notice in newspapers, a process that made practical sense before the internet and that most people would agree is effectively invisible today. New York, Texas, and several other states have implemented proactive outreach programs that send direct mail to people whose property has been escheated. But those programs are not universal, they depend on having a current address, and they still miss millions of people every year. The fundamental design of the system puts the responsibility for searching on the individual. The state holds it. The state makes it available. But the state does not come looking for you. In fiscal year 2024 alone, states returned $4.49 billion to rightful owners, a record amount, according to NAUPA. That number represents the people who searched and found something. It does not represent the people who never searched. With $70 billion still sitting unclaimed across all 50 states, the gap between what has been returned and what is still waiting is a clear measure of how many people have not yet looked. Here is exactly what you need to do, starting today. Go to missingmoney.com. This is the official NAUPA-endorsed free national search database. Enter your first and last name and select every state where you have lived or worked. Do the same search using any previous names you have used. Maiden names, former married names, any name variation that appeared on your financial accounts. Search the names of deceased spouses and parents if you believe you may be entitled to their unclaimed property as an heir. Then go directly to your current state's official unclaimed property website. You can find it through unclaimed.org, which maintains a state-by-state directory of official programs. The state database may contain records not yet reflected in the national search. If you have any history with pension plans from previous employers, go to pbgc.gov and search the PBGC's database for your former employer's name. If you changed jobs multiple times over a long career, check every company you work for that offered a defined benefit pension. If you believe you or a family member may have held U.S. savings bonds that were never redeemed, the guidance now directs you to your state's unclaimed property program, as Treasury Hunt was retired in September 2025 per the Secure Act 2.0 provisions. Every one of these searches is free. Every one of them takes minutes. And the claims process, when you find something, requires only standard documentation proving your identity and your connection to the property. Most claims are processed and paid within a few weeks. The money is there. The names are in the databases. The law requires it to be returned the moment you ask. The only step that has not happened yet is you asking. $70 billion is not an abstraction. It is the accumulated result of millions of individual accounts, individual policies, individual paychecks, and individual savings decisions made by real Americans over the course of real lives. Money that got separated from its owners through moves, job changes, company closures, and the passage of time. Some of it has been waiting for decades. Some of it has your name on it right now. The search takes 3 minutes. The claim is free. And the government is legally obligated to give you back every dollar the moment you prove it is yours. This video is for educational and informational purposes only and does not constitute financial, tax, or legal advice. All figures cited are sourced from publicly available data from the National Association of Unclaimed Property Administrators, NAUPA, FINRA, AARP, the Pension Benefit Guaranty Corporation, and official state government websites. Unclaimed property laws and search procedures vary by state. Always verify current information directly with official government sources before filing a claim.